Very first 21 Hats conversation. My name is Loren Feldman. I'm your host, and I'm here with a couple of pros whose expertise I have called on many times before. Lou Mosca, who is Chief Operating Officer of American Management Services. Why don't you wave at us, Lou?
There you go, Loren.
There we go, with
Hey,
the big logo behind you. And Chris McKee, who's standing up in the lobby of his accounting firm. Chris is managing partner of Venturity Financial Partners. And we're here to talk about an issue that has a lot of people, a lot of business owners concerned. It involves the PPP loans that so many of us applied for and got earlier this year. Now, as we get to the end of the year, we're thinking about taxes, and there's some big questions about how to manage this, how to handle it so that you don't wind up with a big tax liability. I first became aware of this issue because Lou was kind of waving the red flag on his social media accounts, warning of what I think you called, Lou, a possible PPP tax apocalypse if you were not prepared for the potential liability. So let me see if I'm hardly the expert here, but if I can grasp what the issue is, then anybody can. So let me see if I can state what it is, and then you guys will correct me and we'll make sure we get it right. As I understand it, the issue starts if you get your PPP loan forgiven. Once it's forgiven, it goes from being a loan to being essentially a grant, which means it's taxable income. So that's kind of surprise one for some people. And then the other issue is the IRS apparently so far, and you guys will correct me if I'm wrong about this in particular, I think the IRS is saying that you cannot deduct the expenses that you paid with that loan against this income after it's forgiven. So that's surprise number two. You are liable for the full tax liability without being able to deduct any expenses. How'd I do?
I think you did pretty good, but the first part, the PPP loans are, when it's forgiven, are not taxable, which was the intent of Congress. The issue is the IRS came in the back door with the second part that you said, which is that the expenses aren't deductible, which gets you to the same place, effectively saying that you're going to have to pay taxes on it. Lou, am I right about that?
Well, you know, I haven't practiced accounting in a long time, Chris, in a long time. But the way I understood this was Congress's intention was it was supposed to be forgiven, recorded as a grant and other income.
Wait a second, not supposed to be forgiven, meaning the loan forgiven, or are you referring to the deductibility issue?
Let's talk about the loan first. So if the loan was forgiven, it got forgiven in the form of a grant. So you had to apply to your commercial bank that you got the money from. The commercial bank, if I understand this correctly, would approve or deny whatever percentage they believed you had earned the right to be converted to a grant. And for some folks, that would not be 100 cents on the dollar. And the amount that was converted to a grant would be recorded as other income for you. And then the Internal Revenue Service came in after the fact, and without being a little bit of a junkie, issued notice 2020-32 that said that if it's forgiven, then the deductibility of what you use the money for goes away in its simplest form. So if you got a $100,000 PPP loan and $80,000 of it was forgiven, now those $80,000 you used to pay payroll or rent or debt, mortgages, I believe, Chris, and utilities would be disallowed. So now $80,000, whatever your tax rate is, that's tax burden that most people probably don't have that money if they went through their PPP funding. That's what alarmed me when I started to read this. And, you know, I'm so crazy about this kind of stuff. I've spoken with 3 CPA firms and 3 bankers, and they're all telling me that I'm understanding this correctly.
Yeah, Lou, I think, oh, go ahead. Loren.
No, go ahead, Chris.
Yeah, Lou, I think you've got it right. And I was actually surprised how many tax CPAs didn't really grasp it early on. And to carry your example a little further, it's like you could have gotten, say, a $300,000 PPP loan, and you come to the end of this year, and let's say you're break even, and so you have no taxable income. So you're thinking in your head, I'm not going to pay taxes this year. Well, the IRS is saying, and let's say you got $300,000, you got forgiven that entire loan, and you still would have zero taxable income because that forgiveness doesn't count toward your taxable income. So you still have zero. But then the IRS comes in and says, wait, the expenses, the payroll and all those things, you have to add all those back that you paid with that. So now your taxable income goes from zero to $300,000. Now you probably have a $100,000 tax liability. And I will tell you, most of our clients that we do the accounting for have spent that money. They don't have that money set aside for taxes because they understood that it was not taxable from everything that Congress told them and the press told them. And so that's the apocalypse that Lou, I think, put so well. So
I think there's so many ways to look at this, but it sure makes the EIDL look a lot more attractive sometimes in terms of 30 years, 3% interest, and don't worry about applying for any forgiveness. You've bought this luxury of time. But when people apply for the Paycheck Protection Program, they believe that you apply, you get it, it will get forgiven. And a lot of people didn't take into account that. And if this is your role a lot better than my role, Chris, a lot more than my role. People didn't take into account you had to maintain employee count, you had to maintain salary levels. There's formulas you have to comply with to get that credit. So you're right. People kept folks on the payroll that they might not have automatically because their business had dropped off the cliff so much that now they've got payroll they've expended for production they couldn't accomplish and a tax bill that they most likely don't have the cash for.
Well, Lou, let me pick up on that because that's something that I'm hearing about that I think is a particular concern. Playing off the example you just gave, isn't it possible that for somebody like a restaurant in particular that wasn't able to operate when they got the PPP money, they could have theoretically, and I'm sure some did, use the money to pay employees who were not working? Those employees could have gotten unemployment, but maybe got paid. So the business owner is paying people not to work, and then at the end of the year doesn't have that money and finds out that they have to pay taxes on the money that they paid employees not to work. Do I have that right?
See, the show's over. You got it all covered.
yeah, that's it. That's
I can understand somebody feeling a little aggrieved by that.
Well, you think about it, and you and I have talked for years now about, my virtually the only hobby I have is I love restaurants, which nowadays is not a hobby. Right? It just doesn't exist. But if you think about your favorite little whatever down the street from where we all live that's struggling to do $600,000, $700,000, $800,000 a year and make themselves 5% profit, I'm going to bet you anything this year, as Chris was saying, their revenue's half. Maybe it's half this year, and they think this PPP got them through, and all of a sudden they're going to have a tax bill that there was no way they were counting on.
Well, then here's the thing, Chris, let me ask you this. I'd like to try to narrow down who needs to worry about this. So you gave the example of somebody who thinks they don't have any tax liability because they were break even. Suppose if they check it out, and even with the income from the forgiven PPP loan, they're still not making money. So they're still not paying taxes. Are they in the clear? Do they have nothing to worry about in this situation?
Well, I think it's a missed opportunity there. And so let's say that they had such a big loss, they wouldn't have paid taxes anyway. So with apologies to I'm a financial accountant, so I keep people's books. My expertise is I'm not deep in the tax side, but if you have a loss and you've had income in past years, you can carry some of that back to previous years, and they may be counting on getting a refund from previous years when they paid taxes, and suddenly they don't have the big loss carry back that they thought they were going to have too. So I think it affects anybody that expects any level of forgiveness on their PPP loan. And by the way, it's not a matter of have you gotten forgiveness yet. You can't say, oh, I'm going to wait until the first quarter of next year and then apply for forgiveness and it'll be next year. The way the IRS is coming back and saying it is, if you expect to qualify for forgiveness, regardless of when you receive it, you can't deduct those expenses for 2020. So you can't manage the timing of this either. So
what are you guys telling people in terms of when to apply for forgiveness? I know at one point there was word was out that people should postpone that there were going to be changes coming, and that it may not even be necessary to apply if your business is small enough, your loan was small enough, or that the application form might be simplified. What do you guys think? Should people go ahead and apply now?
I'll tell you from my perspective, I have pretty good dialogue with 3 CPA firms, and 2 of them are very large, and have pretty good dialogue with 3 commercial bankers, and all of them tell me the same thing, and that's delay and give Congress a chance to act. I'm not a delay kind of guy, so I actually think you should attack your problems and at least figure out where you're going to stand. But Chris is right. If you took the deduction and you received the money in 2020, you can't delay the tax bill. I mean, if it's going to be a tax on it, you can't delay it. The bigger issue to me is, if folks had conducted their affairs properly to begin with and weren't so dependent on the payroll protection program to begin with, half of this angst would have went away. All right. Because I sort of agree with Chris. You said you're a financial guy, not a tax guy. I'm not a tax person either, and I haven't practiced accounting in 100 years. But, we get ourselves into this situation when we don't have the right liquidity. And that comes from how you manage your business, right? But Congress, I can't believe in a million years, as suicidal as Congress is nowadays, that they ever meant to penalize small business owners by doing this. I just wish somebody would get their act together and get it resolved.
Let me just say to the people who've joined this conversation, feel free to post questions in chat. We'll try to get to as many as we can. Let me ask you, let me follow up on Lou's point with you, Chris. Is it people who defend not allowing the deductions refer to it as, say it would be double dipping if you did otherwise? On the one hand, you get free money, and then on top of that, you take a second dip by deducting against the free money. How do you feel about that?
it's funny you mentioned that, is because in preparing for this, I was going to specifically potentially bring that up. That's what a lot of quote tax people were saying earlier in the year when they really didn't when people really hadn't thought through this. You're not double dipping, because the Congress, as Lou said, Congress's intent was these funds shouldn't be taxable. So if you go back through my example, people had taxable income of X. By backing out those expenses, it's really the government that is coming back and making this taxable on a backdoor basis. So we're not, somebody's not getting income and deductibility. They're not doubling up. It's either one or the other. And what's happened is that the way the IRS is done is double dipping would be somehow doubling up on the tax benefit, and they're not, and that's not what's happening here. I mean, people are reporting the taxable income they would otherwise have, and then they're getting the full benefit of the funds, and they're not taxable, which is what Congress really intended. So I think people who think of it, who talk about it in terms of double dipping, aren't really thinking through kind of what it is. I think it's the opposite. It's a backdoor tax that the government's really imposing.
There was some, there's about $500 billion in PPP loans given out. And I can't imagine that, I'm going to bet you there's a percentage of folks that never would have applied if they knew that there would be this backdoor tax, this tax bill, because it was pronounced as a lifeline. It's a lifeline. First for 8 weeks, then for 24 weeks, and which never made sense to me, that how you're going to stretch 8 weeks worth of money for 24 weeks, but it just gave you more time to use it in their formula. Wasn't enhanced cash or liquidity for you, gave you more time to qualify for the amount to be deemed a grant. But $500 billion was granted, and I can't imagine that all those folks would have applied if they knew there could be a 20, 30, 35% tax bill. Because I would imagine most of these small business owners, Chris, are S corps, and it flows through to them. I would imagine. So that's just, it's just doubling up on their tax bill potentially. I'm going to bet a lot of people would have said no.
I think it was always overblown as a lifeline. I mean, just think about it in terms of you get this check, but the majority of it has to go to employees if you want the loan to be forgiven. That doesn't save a business, especially a business that's not operating. But let me ask you about that, Lou. To the point you're making, what about somebody who actually had a pretty good year? I mean, there certainly are businesses who have done well in this environment for one reason or another, and you could have someone who, just has had a great year. They get this essentially grant money on top of a profitable year that they had anyway. It doesn't seem quite as egregious that they have to pay taxes in that situation, does it?
It does to me.
Does it?
It
Explain
does
why.
to me only because, there's rules to a baseball game, right? There's 3 outs. The pitcher's mound is 60 feet, 6 inches. The baseline is 90 feet. And, in the 4th inning, you don't change the rules. All right. So here, I think, and I don't think the federal government does a lot of things right most times, but I think the fact that they came out with PPP as quickly as they did and got money flowing as quickly as they did, I actually think that was pretty extraordinary. I think an 8-week window probably wasn't practical. It probably should have been a 6-month window if they were going to do it. And 6 months isn't enough nowadays for some folks. But you don't change the rules in the middle of the game and think it's okay. It's just not okay.
You feel the same way, Chris?
Yeah, I do. And, the good news is that I'm seeing a lot of activity out there around trying to address this issue because people have raised it as a red flag. We certainly pretty early on raised it with our clients, our small business clients, to give them a heads up. Many of them said, that's great to know, but I've spent that money. I can't, or I have to spend that money to stay alive. I'll figure out the tax thing later. And so fortunately, I've been reading some things that, in fact, I think the latest legislation in the House includes kind of fixing this problem. I think there is a lot of momentum behind it, a lot of trade associations, a lot of CPA associations.
Fixing it by allowing the deductions?
Congress to overrule the IRS.
Yeah, the IRS is the only way that that ruling from the IRS can be overruled is if Congress comes along and amends the PPP or creates some new legislation. And then this next round of relief that there's a lot of talk about over the last few weeks, it's actually moving along, and it includes sort of fixing this situation. And, based on my experience over the last many years, when you run into unintended consequences like this, it is not unusual for Congress to step in, albeit often at the 11th hour, and fix these type of situations. And I just think there's enough momentum behind this that I do think it's going to get fixed. Just based on my past experience, I certainly hope it does on behalf of our clients. So.
Well, there's also the possibility that there'll be another round if they actually get their act together and pass legislation for more support, and hopefully they'll get it right that time. Lou, I'm wondering, could you walk us through an example of a client and a particular situation that you think would illuminate this? I think sometimes just seeing the actual situation and in walking it through in round numbers can help people understand what exactly is at play here and apply it to their own situation.
We've actually worked multiple scenarios with several clients, and some have actually toyed with the idea of not applying for forgiveness.
Really?
Right. And because the interest rate's only at 1%, so they've toyed with the idea of not applying for.
Lou, we lost you.
I think it's a 60-month payback after your, pardon me?
We lost you for a second there.
Did you?
I think you're back now.
I didn't go anywhere, I promise. I wouldn't dare, Loren, after all these years.
I appreciate that. Go back and pick up from the point where they toyed with the idea of not asking for forgiveness? Why? That's, let me just start by saying that's counterintuitive. I mean, you're only paying a percentage in taxes of the overall grant. Why would you not apply for forgiveness?
Well, I'll tell you why. There's one in particular in Virginia that got several $1,000,000, and he was having a decent year. And then, April, May, June, July were not so decent. And he got several $1,000,000. And, if it's all forgiven, the tax bill on that several $1,000,000 can be, over $500,000. So he said to himself, if I pay the $2,000,000 over 60 months, then it's X amount of dollars a month, and I'm only paying 1% interest. Of course, we showed them that made no sense. You really want to take advantage of the grant, because even if you're paying the tax, it's only a percentage of it, not the whole thing. But I'm telling you, when people feel like that the rules have been changed mid-game, they start thinking a little bit out of their normal, shoe size. So for us, what we try to do with each owner is we actually try to help them do their application first, because obviously it was not the easiest application to submit. But we want folks to understand, if you have solid profit, pay your taxes. So Chris, you said before, you really don't work on the tax side, more the financial side. One of the things that always makes my head hurt is when people say to me, my biggest problem is I pay too much in taxes. No, that's not your biggest problem. That's a great problem. It's a wonderful problem. All right. Now, if you don't have the cash to pay your taxes, that's the problem. Okay. But I mean, what are we talking about? So to us, we want to sit with our clients and try to create a decent tax strategy for year end. And that includes their tax CPA, which is not us. But we always want to preserve liquidity to the best of our ability for our clients, because that's the only thing that's going to get you through any calamity. Mm-hmm. So in this scenario, to pay it off over 60 months at 1% interest made no sense. Of course it didn't. Pay the darn tax bill.
How about you, Chris? Do you have an example that we could walk through that might help people understand what's going on here?
I think that one I walked through a little bit earlier is probably my best one. We work primarily with smaller businesses. We do the accounting for businesses primarily under 20 million in revenue. And so a lot of our clients, certainly north of 75–80%, applied for and received a PPP loan. So we actually have gotten to the point, because there is some complexity to it, of putting together kind of an internal task force that works with our clients to assess their situations. Because as you guys said earlier, some of these can be relatively complicated. And so I think the piece you asked earlier about applying now or applying later, I think it varies on a company by company basis, but we do probably lean a little more toward, like Lou said, getting it off your balance sheet sooner rather than later, and knowing that you've got some certainty around the forgiveness. The rules have continually evolved over the course of the 9 months since this program, 8 months since this program came out. And getting that application in and getting your forgiveness kind of puts it to bed. And I think there's a lot to be said for that. The only exception is if we feel like for their particular use case or their situation, something may change. And some of the new legislation, the additional round of PPP, one of the things that they may do is simplify forgiveness for loans under $150,000. And for some folks that have smaller loans, it may make sense for them. But there is some complexity around it, but it's not really that complex. So for our average client that didn't have a lot of changes in employee count and that kind of thing, we're usually spending half a day to a day kind of getting their application together. In the grand scheme of things, that's not terribly complicated. So I just lean toward, as Lou said, getting your financial house in order. And it's just probably better, unless you've got a compelling reason to wait, to apply, get it off your balance sheet, and have it kind of put to bed. So
there's another side to this too. If you get it, and I think this is correct, the amount that's forgiven that was supposed to become other income, it's also a direct bump to your net worth. So if you've had a stressed balance sheet, right, that other income is going to go right to the net worth section of your balance sheet, and that's an instant prop up. So if you borrowed 500 and 500 gets forgiven and you have to pay 150,000, you still picked up $500,000 in retained earnings, net worth, whatever you want to call it. It really props up your balance sheet, and a lot of companies can use that. But I still go back to, you can't change the ball game in the fourth inning. So I also believe that Congress will most likely do the right thing someday. And that's a little,
Yeah.
that's a little terrifying.
It won't be
Well,
timely. It won't be.
Imagine that.
Well, I guess the worst case scenario here is Congress doesn't change it and you're a business that's stuck with unexpected liability and you don't have the cash to pay it. Do either of you have clients in that situation, and what would you tell someone in that situation?
Yeah, we're going to have some clients in that situation, and I think that the things we're going to tell them is work out something with. A lot of times you can work out something with the IRS and pay this over time. But you're gonna have to get some sort of financing for it. I agree with Lou's comment.
Isn't that insane?
Yeah,
Isn't
I know,
that
it's
insane?
crazy. It really is.
Just saying it hurts, right?
I know, but I agree with Lou, your comment from earlier about look, managing your balance sheet is really important, and we really tried to kind of give everyone a heads up early on as soon as we were aware of this. But certain businesses were in a fight for their lives, and it's a fact set they're going to have to just sort of work through. It's going to be difficult for some of the folks that just don't have the cash to pay it, and they're going to have to find some liquidity options to take care of it. So.
And IRS financing is not cheap, if I remember correctly.
No,
right?
not.
I mean, it's not 2% interest.
Well, how about this situation, Lou? You have the surprise tax liability, but you've actually had a pretty good year. So you do have some money on hand. Is there anything you can do now to address that liability? It's the middle of December, but it's still 2020. Can you go out and buy something to try to manufacture a deduction?
All right. So, I can't speak for others, and I don't profess to be a tax expert, but we start working on our tax strategy here on October 31st every year, like clockwork every year. And we're
for that year or for the following year?
For this year,
Okay.
October 31st. That gives us 2 months to figure out where we want to end up and how we want to end up. And as an S corp, there are areas you can work on, and but I think that. Listen, I think that what might happen, unfortunately or fortunately, I think a lot of people are going to file their 2020 tax return. They're going to have a lot of deductions offset. They're going to pay a tax bill. And if Congress ever gets around to doing what they're supposed to do, file an amended return next year. All right, or something. And that hurts my head to even say that, because we shouldn't have gotten to this point. It's like play baseball to the fourth inning, and now we're going to use the football from the fifth inning on. It's just crazy, right? So, but I think people will file, absorb the taxes, and then file an amended return next year. Something doesn't happen in the next 60 days or so.
Yeah, Lou, I don't think Lauren, I don't think there's a lot of options that you have that wouldn't be your normal options. I mean, obviously I'd encourage people to get with their tax CPA and talk through it, but it's the usual, put money in retirement accounts, all those kind of things. But if you don't have the money, it's a moot point.
Right.
And what we may end up with is, if it doesn't get taken care of soon, people are going to have to start making some tax payments by January 15th, some estimated tax payments. And some of that money that was stimulative earlier in the year is going to have to come back the other direction. And we might see some latent layoffs and things because people are going to have to create some money to make some of these payments too. Now, businesses that have done well, they're going to be able to pay the tax. It's just going to be a missed opportunity as well for potential investments that they may have otherwise made. For us, we are fortunate in that we had an okay year, and we're going to have the money to pay the tax bill, but that's going to be in lieu of some money that we might have spent on some new office space we're looking at and some things like that. So it's that counter stimulative effect that Congress was not intending that may end up happening with this. That's money that went into the economy that will then come right back out of it. So.
Well, sort of the good news is if you had a decent year and you can afford to do that, that's where you're supposed to be. That's the way business is supposed to be, right? It's not like it's the way it's supposed to be, but that's not what the rules were. All right. And it's not what the deal was. And I'm going to bet anything that $525 billion that was lent would not have happened that way if people knew this.
While I got you here, we only have a little bit of time left, but I'd love to ask you a couple of other questions just to take advantage of your expertise. But before I do that, have I missed anything? Is there any other aspect of this that either of you would like to call to our viewers' attention?
I don't think so. I think that the timing of forgiveness is an important thing right now, and then the taxability. Those are sort of the two most important issues. I do think there's going to be another round of stimulus because of the two things. A lot of the sectors of the economy are slowing down and shutting down again because of the increase in COVID cases, and the vaccine is being pushed out a little bit in terms of timing as to when all that's going to happen. And so I do think there are certain sectors, and as you guys mentioned, restaurants are particularly hard hit, and they're the first ones that get closed down as things begin to shut down again. I think that we have some restaurant clients, and we are advocating with our congressman on behalf of our restaurant clients, in particular, for another round of stimulus targeted at restaurant and hospitality type clients, because they really truly have suffered much more than a lot of other sectors of the economy for a much longer period of time.
Could I ask, how are you advocating for them, and do you feel your voice is being heard?
I do. So the way we're advocating is, a friend of mine, Ari Weinswag, is with Zingerman's Deli up in Ann Arbor, Michigan, is leading a group of independent restaurants that have been advocating for many months for an additional stimulus. And so I've been talking with them and getting feedback from them as to what I need to do. And then I've been contacting our local congressmen here, both where our office is and also where I live, to try and get them on board with it as well. I think that from what I was reading yesterday, the latest round does include some targeted relief, in particular for restaurants and other hard hit businesses. So, but there's the Restaurant Act is what they've proposed. And so it's something that you can do a little Google search on if you have a particular passion around that as well. And I think that particularly the independent restaurants have been particularly hard hit.
So I think, Loren, that I think to some degree restaurants have not been helped enough. And listen, I'm not a give the money away kind of person, as you've known over the years, Loren. But I think in times like 2020, there are no rules. You're making the rules on the fly. So you either want to help or you don't want to help. This can't be this half a bag of tricks, which is sort of what we always do in this country. I have a relationship with the United States Conference of Mayors that has about 1,200 mayors in at any point in time. I talk with them every week about them lobbying the Hill for, what independent business owners need. I think that one of the things independent owners, Chris, you said a minute ago how some people just, prefer to kick the can down the road. I'll deal with it later. Well, later's now. When it comes to tax filing, your 2020, your last estimated tax payment is due January 15th, right? So unless you want to incur some penalties and interest, which once again, the IRS is not in the free money business, it can be significant. So, kicking a can down the road, that's what gets independent business owners in trouble. So I have great compassion for restaurants for a whole bunch of reasons. I do believe there will be or should be or could be a second round of PPP funding and a separate tranche for restaurants, which I read that also. I also read, just on a surface, about how they want to restructure the tax implications, but not the details because the bill's not been published yet.
Yep.
I've also seen a lot of the trade groups writing to the speaker and majority leaders and stuff like that, but I don't know what gets these folks' attention. Independent business owners are always popular during an election and then forgotten after an election, right? So, we're no different than where we've ever been. And the guy I work for says small businesses just not
Except that the
taxed.
stakes are so much higher.
It is brutal. It's brutal. It's absolutely brutal. And, but I think that owners need to realize just because you got $100,000 doesn't mean you're going to get a grant for $100,000. You got to dot your I's, cross your T's, and get the paperwork flowing so you at least know where you're at. You got to know where you're at. Otherwise, you're operating in a vacuum, and that's a mistake.
You're referring to the fact that the entire loan doesn't have to be forgiven. Based on how you spent it, you might just get a certain percentage of it, and that's
correct.
That's the application.
And then that's a double whammy because what got forgiven, you can't deduct, and what wasn't forgiven, you have to pay back. So now it's new debt service. Where else is the money supposed to come from? I know, Loren Feldman.
Thanks, Lou.
No problem.
All right, so we're almost done here. I want to ask both of you. You both have a lot of clients. You see what people are going through. I'd love to hear from each of you. Maybe starting with you, Chris. This is such a weird economy right now. There are companies that are doing great. I just reading the Wall Street Journal about all the money that's getting thrown at startups right now. It's gotten ridiculous. What are you seeing from your clients? What's your sense, at this moment when, there's a lot of optimism because the vaccines are on the way, but the case load has never been worse. Give us a sense of what you're hearing.
Yeah, so we've been really surprised. We certainly had a number of clients that were absolutely devastated by this, and either came back very slowly or didn't come back at all. On the other end, we've got a lot of clients that that did okay or really well because of fundamental things that changed, and their business came into favor for whatever reason. And there's a little bit of survivor's guilt, because. And a little bit of that is tempering a little bit now as we start to move through this. But I think that the businesses that have survived and are doing okay feel like the end is in sight, and that we're going to be able to work through it. The ones that have been devastated continue to have issues. Here in Texas, where we're probably about as open as any state, we just went back in the Dallas area to 50% on restaurants again, and some of our restaurants who were hoping that this was almost over or are 50% occupancy are struggling again. So, I think what I'm seeing is some businesses are utterly devastated, and the majority of businesses are having an okay to a good to a great year, depending on kind of how they're positioned. And most of our clients are going to make it through this, knock on wood, okay. And so that's I think that's a fortunate thing. So that's what I'm seeing for what it's worth. So
how about you?
But I will tell you, the PPP deal did help many of we had a lot of businesses that would not exist anymore had they not had this opportunity to take this PPP.
Lou said that before, and I think it's worth emphasizing. It was amazing that they got the money out as quickly as they did, and we all knew that there would be issues with it, but it did save a lot of people. What are you seeing, Lou?
I think we're in a bizarre time now, right? So, you turn on Squawk Box in the morning, they're talking about SPACs. I didn't know what a SPAC was 3, 4, 5 months ago, right? And then the cryptocurrency is up and it's down again. But when I see from our clients is that when the pandemic hit back in March, none of them were prepared for the scenario we were about to enter into, as most people weren't. And most of them wanted to take a wait and see attitude, and we refused to allow them to do that. So we immediately put together plans for them that we walked into them the second week that this started to flow at the end of March and said, this is what we're going to do for your people, for your business and for your liquidity. Because if we don't protect your people and your liquidity, you're not going to have a business. And this is what we're going to do. And every client we had at the time, every active consulting client said thank you and followed it. And I'm not patting us on the back. We lost none. I'm going to tell you about half of our clients got PPP money. It was the right thing to do, whether they had liquidity or didn't have liquidity. It was the right thing to do under the circumstances. I don't know where we're going. Every independent owner I know is optimistic. I've got folks knocking out of the park, making more money than they've ever made in their lives. And I've got folks that are struggling to get day to day, but they were struggling before also. All right. So sometimes you have to worry about what was that business model to begin with. All right. And what we're trying to do is have our stronger folks capitalize on their strength to take advantage of what they're good at. And our weaker folks find that niche so that they can get through this. But between not knowing what 2021 is going to look like, if there's going to be more money coming, I'm terrified about evictions January 1. I just think it is the next big hurdle.
Because of the impact on the economy?
No, because moratorium on evictions is set to expire, I think, and
No,
it's
but
going to be devastating.
Why are you
for
terrified
people.
about it?
I think it could be devastating for owners with their employees, just the human emotion as it is, and then the financial wherewithal to put it back together again. My son lives in a beautiful apartment about 2 miles away from his mother and I, and he pays his rent like clockwork on time, and he's my kid. That's what he's going to do. And he got a notice the other day, all right, and that it said it was just a nasty gram that we're not tolerating anyone being late anymore. And I know it was a generic notice in his building, but you know, the gloves are starting to come off. And how many more fights can people in our society go through right now? So I just think it is not going to get easier right away, no matter what happens.
Lou Mosca of American Management Services and Chris McKee of Venturity Financial Partners. Like I said, I've called on you guys before. I'm going to call on you again. I think this was really helpful. Thank you both for taking the time.
Appreciate being here. Anytime, my friend.
Thanks, Loren. Yeah, it's great.
Thanks, guys. Take care.
Very well. Thank you. Bye-bye.